Morning everyone, welcome to Ainsley News. It's Thursday, the 31st of March. Today we're talking about Russia. Pretty timely discussion and how they're accepting the ruble, gold and Bitcoin. Russia is demanding payment in rubles for oil and gas, with a number of finance ministers from NATO countries pushing back. German Finance Minister Christian Lindner said his country won't be paying rubles for energy imports. The deadline of 31st of March, which is today, has been extended due to a recognition of technical challenges in changing over the currency of the 200 to 800 million pounds per day paid by the EU collectively to Russia. Italian Prime Minister Mario Draghi weighed in, saying that changing the currency of payments for existing contracts would be a violation of the existing agreements. Russia has been cut out of the global payment system SWIFT by NATO sanctions, and their reserves held in hostile nations have been frozen. These changes are likely a response to the economic sanctions placed on them. Europe relies on Russia for approximately 40% of their gas imports. Wow. However, this is not an even ratio, with some countries more or less being completely dependent, such as Hungary, which gets 95% of their gas from Russia. The European Commission has said it plans to reduce its reliance on Russian gas by better than 2/3 by the end of 2022. However, it would need to continue bringing in Russian supplies until as late as 2030 before making a complete break. Approximately 4 million barrels of oil are imported into the EU daily. However, this is not as significant as the gas trade. The currency wars are heating up as Russia has now presented an ultimatum, and European countries are threatening to reduce their dependency long-term and source energy from other countries. On Twitter, the hashtag #GotGold or Rubles has been trending, with rumours swirling of Russia taking payment in gold or Bitcoin for oil and gas. Reportedly, friendly countries are able to settle with Bitcoin, and unfriendly countries, or sanctioning countries freezing Russian assets, are required to pay with rubles or gold. Kremlin spokesperson Dmitry Peskov told reporters on Monday, Moscow is handling the details of its gas delivery plans to unfriendly countries for payment in rubles, but it won't engage in charity if Europe refuses to pay in the Russian currency. The question as to what Russia would do if payment in rubles wasn't forthcoming, the spokesperson responded that issues should be sorted out as they develop, but we will definitely not supply gas for free. Another Kremlin representative has hinted that it would be right, where there is beneficial for our country, to widen the list of export products priced in rubles to include fertilizer, grain, food, oil, coal, crude oil, metals and timber. As a major commodity exporter, Russia is able to demand payment in their own currency if they are able to live within the initial and potentially long-term hit of the loss of forex inflows. The Russian central bank is buying gold from banks at a rate of 5,000 rubles per gram, or around 2,170 Australian dollars per ounce, from the 28th of March to the 30th of June. We would also love to buy gold for that price, but it does make it clear that Russia is purchasing gold, not selling. Given that the peg is significantly below the prevailing spot price, it is hard to speculate why Russia didn't go with a higher ratio like 8,000 rubles to the gram from the get-go. This rate is emerging as an initial peg to gold. 155,500 rubles to the troy ounce, which can be revised to revalue the ruble backed by gold. After the value of the ruble fell dramatically since the announcement of the Ukrainian invasion in late February, the US dollar to ruble rate may be bottoming, with various forex websites having a low of 165 rubles to the dollar, and at the time of writing an exchange rate of 88 to 106. As the ruble has strengthened in the last 2 weeks, fewer rubles are required to exchange for each US dollar. You can see the price stability in the month leading up to the invasion that the spike is now coming down. As the ruble returns to the old norm of 75, the US price of gold is predicted by some pundits to rise structurally, as it has a peg to gold. While many of the details aren't clear and the settlements between countries in gold are opaque at best, it has been a long time since a country was willing to buy back its own currency in exchange for gold and at a fixed rate. It sounds like some kind of gold standard. With the current purchasing power of the ruble depressed, 5,000 rubles per gram of gold is below market. However, if the ruble strengthens much beyond its pre-war exchange rate of 75 to 1, importers will be able to purchase oil and gas at a discount if they use gold. The last question is what happens after the 30th of June, when the gold to ruble rate must be changed. On the eve of the ruble payment deadline, Putin has argued that trust in the US dollar has taken a major blow, and that many countries are now starting to convert their paper assets into real reserves of raw materials like land, food and gold. Chairman of the Congressional Energy Committee, Pavel Zavalny, has added, "The dollar ceases to be a means of payment for us. It has lost all interest for us." Later in the interview, he stated, "A preference for hard money like gold, or for friendly countries, they are happy to accept their currency or Bitcoin. If they want Bitcoin, we will trade in Bitcoin." With record debt and fake money flooding the fiat system, there is certainly a first mover advantage for the sovereign nations that move towards a gold-backed currency. Few expect the US dollar to go the way of the dodo. However, it is clear that we're increasingly moving to a multipolar world where dollar alternatives present a new focal point in a more decentralized system where prices are based on real assets and usage rather than paper and derivatives. Great stuff there. Right, if you are after the physical stuff, jump up over to ainsleyBullion.com.au. That's gold, silver and platinum. Also, you can click through and read any of our news, check out some charts. If you're after some crypto, jump over to ainsleywealth.com.au. And don't forget our own cryptocurrency that's built and backed by gold and by silver, goldsilverstandard.com. Enjoy your Thursday, everyone. We'll catch you tomorrow for end of week news.